David, you're on. I just gave you host capabilities also.
Okay, excellent. Thank you. Good morning, guys. By the way, Dave, I'm going to give you a call. I've got a few things that you triggered. I love what you do. So I thought I would go through some things here fairly quickly, but kind of jump in if you'd like to. But I'll try to get through it so that we can really get into any kind of discussion. You guys are out there as well, and you're probably seeing a lot of this happen. So discussion, questions, ideas, thoughts, all that. It's been an interesting, what, 12, 14 months. One of my favorite discussions is this idea that we thought we had around magic, January 1st being magic. And, all of a sudden 2021 was going to be great. My favorite approach to that is really that today is something like December 47th. And, we've got a long way to go. But lots of good stuff. There is that message still out there. So to set the stage a little bit, I won't read through all this, but just kind of situate where I'm coming from. Been doing this stuff coming up on 21 years, certified management consultant. One of the interesting things we've done, and if anybody would like more info, happy to chat a little bit, but about a little less than 2 years ago, created the Atlanta chapter of the Exit Planning Exchange, an association focused on the whole swath of advisors, helping owners get through, build value, and exit, and doing it the right way with a very collaborative approach. Been involved for the last couple of decades with IMC. Corporate background you see up there. And I guess the most fun part was 4 years living in Paris, doing a lot of M&A work, corporate finance work. So that's a quick background. What is the value track? Plug for Jeff, who helped me rebrand, I don't know when, a few years ago. It's kind of fuzzy BC. But all these words up here are pretty important. It's a very comprehensive approach. So we're not just doing consulting or just doing evaluation or just doing the transaction. We're really helping A to Z and bringing that advisory team around the client. And so it's a very comprehensive and very thorough brain trust, if you will, and coordinated for the owner, as opposed to a whole lot of bilateral conversations. So we're doing mostly sell side. We do get a fair number of folks coming at us thinking that they want to buy something, and very often they really haven't done it before, then they really don't have a good idea and it's really not for them, but we'll have those discussions. Mergers as a tool both toward an exit, but also just for growth, internal transfers, a lot of generation to generation. And as we always say, when we meet folks, they think they're ready. They're often, very often, very, very often not really ready. And we'll get into advisory mode to help build value. Too often they've got an outsized sense of what the value is at the outset. And just to reinforce, it's the advisory team, it's the full set of the consultants, as well as the folks that need to be around the deal when the transaction happens. And at the core of it, we're the quarterback for that team, working with the owner. So what's going on out there? Lots of strange things, lots of good things, always the good and the bad. Dry powder, that term is just cash sitting on the sidelines in the pockets of investors looking for money. Latest estimates, 1.4 trillion. That's with a T, waiting and looking. They're looking for good deals. They're looking for good businesses, fundamental businesses. Some of that has adjusted a bit with COVID, but certainly with COVID, as with any kind of downturn, recession, there are a lot of folks out there, be it private equity, large corporate entities looking to roll up, even smaller entities looking to do acquisitions, sometimes trying to take advantage of where the market is, and we'll talk a little bit about that. But the message here is there's no shortage of cash. There's no shortage of cash. So yeah, as I was saying, a lot going on, a lot of acquisition. We'll talk about it a little bit. We're in the middle of 4 transactions on the sell side, and some of those were over the course of COVID, the phone call saying, hey, are you interested in selling your business? So there was and is still a lot of that. again, sometimes trying to take advantage of that. But if the acquirer is smart, they're going to make a deal that makes sense. So state of the market, again, it's odd and weird, but like I say, there's a lot of activity, and there's a lot of opportunity for the owners of these businesses with the right advisors. And when I say the right advisors, it's all of you and more. So back to the basics and fundamentals, right? So 1.4 trillion off to the side, they're still looking for well-run companies, and if you happen to be in an area where there's a PE firm or a company doing a lot of roll-ups and trying to do a lot of acquisitions, you still may get sold, but if the fundamentals aren't great, you're not going to make a lot of money. And so that's a decision point for the owners at that point, especially if they're older, if they're boomers, and this is meant to be their retirement. So well-run companies, what all that is. It's, all the systems are working, communication is flowing, that blood is flowing through, everybody's talking and working well together. There's a track record, all those good fundamentals that you all know and love. Value. So it's interesting. It's all over the board. It's all over the board. You'll hear people say, "Oh, values are down, multiples are down, people are paying less." Well, it's like before COVID. It's very situational. So if you are looking at restaurants, hotels, airlines, right? Of course, everything has been in the toilet. On the other hand, we've got an e-commerce client. Just got their numbers for 2020. Growth, it was just stunning, probably about 60%. Now, that's e-commerce, and you're going to see that they also had a very well-run business fundamentally. Just so winners and losers, as you've all seen out there. So very, very different. What does that mean for value? Again, it depends. The right companies doing well in the right industries are gonna get very, very, very nice, very, very nice multiples, very, very nice prices. The other thing we see going on out there is just a lot of, I'll say, negotiating. So, you're in an industry maybe didn't do so well. You're in, you had a lousy year in 2020, but you've got a fundamentally good business. So those are just, negotiations and a little bit of creativity. Maybe the owners are staying in a little bit longer. Maybe the price ends up being something that's tied to the first couple of years, 3 years of results post-transaction, where some of that sale price is held back. But what I'm seeing is people with the right mind, in other words, wanting to get things done will get things done. Excuse me. Oh, I just realized, sorry. The admit button's coming to me, I forgot because I'm hosting. So what have we seen a lot of? To me, this is one of the encouraging things. That's a cat waking up or starting to wake up, is the boomers. So some of you have heard me talk about this before, but if somebody's been in business for the last 3 decades, they've gone through 9/11, the recession, and now COVID, the most stubborn of them, who are just waiting because they think they don't have to think about exit planning for another many years, they've been slapped upside the head, just over and over again at this point, certainly with COVID, even with a pretty good business. So we get a lot of calls, a lot of referrals from owners who have finally said, okay, I got to look at something and start doing something. We're seeing a ton of that. I think we're going to see a lot more simply by virtue of that aging population. Something like 70% small business owners are baby boomers. So that's going to keep going. You're going to see that for the next decade. So planning, just making the point that pre-COVID, during COVID, post-COVID, we just need to help these folks get planning, get started. If they haven't started anything, really think about their business, not just growth in a vacuum, but actually growth with a purpose towards a very focused view of timeline to get out, or at least to as a game plan, excuse me, and value and work and focus on nothing nothing but value. And there's never a time that they shouldn't be starting. It's never too early. So, how to get out. This is something that we see all the time. If some people have not been through it before, then they are just imagining they're going to wake up one day, decide they want to sell. They're going to put an ad in the newspaper, and next week they're going to have 47 people lined up. That's not going to happen. But aside from just that straight sale, there's all kinds of other options. Finding a younger owner, complementary business or the same business, doing a merger, working together, and that becomes the older owner's exit plan. There might be internal folks, family, business. I'm talking to somebody now who has basically 3 service lines, product lines, and that plan may turn out to be selling 2 of them and keeping 1. And so when we start talking about this with owners, it gives them more flexibility, frankly, a little bit more hope in a lot of ways. We also, we get people who are just, who've been at it for so long, they're overwhelmed, they're doing everything. And when we have that conversation about what they like to do, sometimes that turns into a discussion around, well, wait, if I can just go and do the business development or just go hang out with the vendors or go to the shows and I can actually have somebody else do all the rest of this stuff, it kind of reinvigorates in some cases, and they don't necessarily even need to rush out the door right away, giving them more time to really focus on building value and do the right timing. So point here, just want to make one point. I had to do this podcast with a colleague a while back, and the framework for that year, that what she was doing was the one thing that you need to know about whatever profession the guest was in. And what it eventually came down to is value. If the owner truly understands transferable value, right, what an owner is looking for, it transforms everything. They're going to start making different decisions, the next day when they really get that. Every decision of every hour of every day, working towards value and towards the target for their exit. So another really important point here, and we've spent untold hours over, since COVID started, especially with folks, is the devastation and the pressure and the depression, is to say, look, if you're not leaving tomorrow, if you don't have to get out now in February of 2021, then those numbers in 2020, as you look at value, just get further and further into the distance. If you're not going to sell for a few years, everybody starts out looking at a business and doing a valuation based on the past 3 years. That's where everybody starts. You do a lot more too and a lot more tweaking, but that's really powerful. And the most recent year is usually weighted more than the prior 2 years. So if you're looking at 2023, 2024, messages, don't worry about 2020. If you've had a fundamentally good business, you had a lousy 2020, but you're rebuilding and getting back to where you were, just don't worry, right? There's some things certainly to do, and we help our clients work through that. But again, buyers know what happened in 2020, and they can tell the difference between being hit by COVID and having a fundamentally bad business. So that's a positive message. So this is a message for the team here and for all of us as advisors. Millions of businesses are going to either transact, shut down, move to family, get sold for much less than they should have or could have. A few will sell under really good values, but they need our help, and those are the boomers. Literally, the stats are like 4 million. So there's a lot of opportunity to help our business owners. All right, so I'm going to just very quick, I'm not going to read through every line here on a few of these. Your task is to figure out what the running theme is, though. So this is a fun one, should be closing next month, software client. And we got in there actually to help with other things, realize, okay, their client should be buying them. We're just about to close on that. That was a lot of fun with a Fortune 100 client, kind of brought me back to my old corporate M&A days. But that will be a big celebration, and big celebration for the owner next month when this thing happens. This is another company. I always need to hide the names for the time being, but something that you guys probably all know. we started out just with an estimate of value, and that triggers a lot. And when they realized what it's worth, what it could be, had to get through a few milestones, but we're engaged in starting to work on this project as well. Another one, again, these all really came out of the 2021 COVID. Somebody said something, they woke up and said, hey, let's start talking. And then a very similar situation where in this case, the owner wants to get on and not just retire, but do some other kinds of investments, other kind of business. So my question is, what's the running theme? Who wants to unmute and jump in and
Retired.
Yeah, yeah. I gave you a little bit of a clue in the blue there. Thanks, Daryl. But yeah, exactly. It's to a person, and they've finally literally verbalized it right now. Like I say, part of this is these folks are in their 60s, 70s, even 80s that we're talking to. Of course, they're tired in general. And then, like I say, so many folks, and you've seen it all. These same owners, they've been doing it all. Not letting go, not delegating, not really building a team, not really building out a sellable company certainly from the human capital standpoint. So to me, again, that's a positive. They're waking up a little bit. Doing it the right way, well, my bias is you start working when you open the doors of your company, and just build your business the right way, which is a huge part of exit planning. In this case, this was a couple decades late, but it was great because this is a husband-wife couple. They were very open from the outset. They understood they needed help. They weren't in a rush to sell in a month or 6 months. And so we started out at the end of 19, so before COVID, worked through all these different things. Huge plug for Jeff. Jeff was working with us on this. He is working with us on revamping brand and all kinds of other brand initiatives. But we just took it step by step, looking at every part of the business, and we're still working with them. And we just kind of launched into 2021 initiatives with a very specific target around date and time and value, all those good things. It's a wonderful thing. They love the multidisciplinary team that's working with them. It's their team. We're part of one team. And just on the financial side of it, they recognize they've got this, this brain trust for the price of, maybe one full-time, internal manager kind of person. So just pointing out and give you guys a flavor of, if we can get in there, early enough and really work, we can really move the needle on value. Ending here pretty much with this, I'm thinking and thinking and thinking. You're always thinking about what are those trigger questions. But if you ask owners, how has their exit plan changed coming out of COVID, and what's happened to the value coming out of COVID, they're going to do one of those Fred Flintstones, they're not going to have any clue, or they'll make something up. Whatever it is, it's a great conversation starter. And if that can trigger an hour for us to chat with them and you to help them just reorient a little bit, love to do that. Anybody that says, oh, I'm good, other than, in a few industries, maybe they're lying to themselves or delusional, and we'd love to help them get started on the right track. So in our world, again, I'm not going to read through all this. This is a little bit of a picture of where we play and like to play. I'd love to have those kinds of conversations. And I'll point out the referral sources. If you know good folks in those areas, those are great conversations for us, financial advisors, attorneys especially. I'm always looking to speak on all these kinds of things, so I would love that. Any kind of referrals to groups you may be part of. And then that's it.
Thanks, David. I guess the probably the most important thing you can do for the folks, David, is to speak a little bit about how they can work with you. You've talked a little bit about the obviously the key touch points and all, but and the benefits financially, at least, of bringing their clients to you guys to help engineer a transaction.
Yeah, no, that's great. Now, let me hit one point. I see Doug wrote in there to me. His financial advisor said dry powder is over 7 trillion. Yeah, I think it's calculated different ways, different groups. I think what I put out there is private equity. 7 maybe just all the companies, all the corporations, et cetera, et cetera, et cetera. You know, when you get up to the trillions, whatever, it's a big number. Yeah, so I think I'm connected to most of you and been doing a few connections here on LinkedIn and all that kind of good stuff. But yeah, it's just getting to know people, what everybody does, where they fit in, you know, what kind of industries, all that kind of stuff. We try to. I always refer back to the old Mission Impossible, the original series. They'd open up each one. Peter Graves sits there. He has a mission, and he's going through, you know, who he's going to put on his team. Somehow it's always the same people, and back in the show. But yeah, no, it's just figuring out, you know, what the needs are. So when we, you know, if we're not going right to market for a sale immediately, we'll go and we'll do an estimate of value, just kind of level set the stage. Sometimes they start crying, and we console them for a while, and then we start get into you know, consulting mode, and we'll come out with, we'll do essentially a due diligence, come out with a series of recommendations about what we think they ought to implement in priority order over the next, whatever it is, 24, 36 months. And that can be all the different disciplines in different order. So when those things come up, then we're trying to figure out, okay, if we need, you know, if their accounting and finance and cash flow is a mess, you know, then maybe the first thing is focusing on that, getting in somebody from a financial perspective. You know, it could be marketing, it could be anything, right? And so we're just looking for the right people to plug and play in that. So it's just keeping in touch and understanding the resources and the best fit for that. Mark, did you have something?
Yep. Just wanted to ask, what percentage of the folks that you're working with are retiring, or are they looking for other ventures? Is it usually family owned? Those types of things?
So all over the board. I would say, you know, I kind of say kind of retire, but I'm not sure. It's a good question. As I think about it, I think very few, when they really get down and we're really talking with them and talking through things, are fully going to, you know, retire in that classic sense, actually.
I mean, I know that Dave Romer and myself both, you know, we scour through, and our job is really to find the best franchise opportunities for folks. Some of the best placements I've had have been the siblings and or somebody that was benefiting from a sale like that, and finding the right next venture for them. I mean, one of the gentlemen I placed here in Atlanta came from a group that the family sold the entire business. He came out of it with $12 million, you know, needed something to do, and those things. So you have plenty of people here that are experts in that field that people are looking at opportunities.
Yeah, no, I appreciate that. And yeah, that's what I was saying. As you triggered, I'm just thinking quickly through my head on all these folks, and sometimes we'll see they think they're going to totally retire, you know, and then a week and a half later.
Right. Well, what we find, and I'm sure Dave can say this, most people think that they can, you know, get into a franchise and then all of a sudden, you know, revenues are starting day one. It usually takes about 3 to 5 months to work with a client. And then if they're really good, you're looking at 3 to 6 months of real hard work getting into that. So timing that is something that, you know, you have experts that can help people with that.
Yeah, no, well, and the other thing we're doing that feeds that is early on. I mean, it could be years ahead when we first have these conversations. It's really this counseling session of what are you really going to do afterwards? So we get in there pretty early on that. I got to say, Bart, I used to, for years, just along those lines, I you know, people have this idea, they get a franchise and it's magic, and they can go to the beach and they're, you know, so the way I used to describe it was you sign up for the franchise, you sign the agreement. 3 days later, UPS shows up with a box, and you open the box, take it out, and you blow this thing up, and you have McDonald's, and you don't have to do anything. That's exactly how I would describe it.
Yeah, no, man. Rude awakening. There's lots of great businesses out there, but I think Dave hit on it before. There's about 2,000 to 3,000 franchises.
Yeah.
Of those, about 80% of them don't do that. So, and if you don't know that and you call that franchise directly, you're going to get suckered into something that you're really not happy with. And I'm sure his services are free as well.
Yeah.
Consultation for us is absolutely free. And I'm sure he pays referrals. I do too. So, I mean, you can make some money at that too. But best
Yeah.
clients come from that type of environment where they're about ready to get money. They need to reinvest, whether it's real estate, doing a 1031 exchange, doing those types of things. Generally, that is part of the wealth management when they're exiting. So we're here to help if you want.
Can I just add to that, Mark? You made absolutely excellent points. Every one of them was dead on, and you know, a lot of a lot of folks really don't know what they're getting into, and frankly, I was one of them. I actually got into a franchise that I've regretted it ever since, and that's why one of the reasons I'm doing what I'm doing now is to help people avoid that, right? You know, the other thing, Dave, is, and this is probably a lot less applicable, but if you get somebody that's in the process early enough in the process, and I love the fact that you said, you know, you really should start thinking about your exit strategy when you open the doors, and not from a you know, okay, I'm going to do this, I want to sell in 5 years, but you know, I want to build this thing so that when I am ready to sell, right, I have something to sell.
Yeah.
But you know, if there's an opportunity if you're early enough in the process, and you got to be early enough to do this, you know, potentially maybe franchising the concept is part of the exit strategy as well, right? Because that can help help them create even more value going forward, and that's also an opportunity. Potentially, right? Not just, you know, what are you going to do when you leave, but you know, hey, maybe franchising is part of your, you know, your wealth building, your value building strategy, that can help you sell your company for a whole lot more. Because that's something also that I can help folks do is help them franchise their concept. So, you know, just something else to think about.
No, that's really good, especially in the context of starting early, right? So if you, you know, you think about it, you know, we run into some of these folks, you know, 75, and again, there's no way they're going to do it. But if we can get in there earlier, definitely, yeah, if there's a good concept. I wanted to hit Jeff, put a question in chat. Yeah, just to expand on that for a moment, you know, why is it so transformative when owners truly understand value? And it's, you know, it's sort of simple, but when you understand what a buyer is looking for, and the way we kind of phrase it is getting the owner who's thinking like a seller to think like a buyer. And if you think about that for a minute, yeah, it's a tongue twister a little bit, but the seller, you know, it's their baby, right? They put blood, sweat, and tears. It's worth gazillions and gazillions because, and you know, the harsh reality, it's not. So what is a buyer looking for? So when the owner, you know, starts looking at value, understanding value, what the owner is looking for, again, it's all fundamental, right? It's going to sound so basic, but it's, you know, the team runs well together. There's people and process and communication. The owner is not, right, relevant anymore is the ultimate, you know, recurring clients, you know, at least, you know, long-term projects, great brand, all those things. That goes on and on. But if they understand those things, what drives value, then literally every decision they're looking at, right? Do I buy this piece of equipment or not? Or given my time frame, do I hire somebody? Wait, hire somebody, they got to spend money. Yeah, but if you hire the right, say, business development person, it's an investment in that. One of the simplest things, if they haven't been through this or don't have a good financial background, is to say, you know, when you look at basically cash flow and EBITDA, people tend to think in those multiple terms. But if I'm looking at the cash flow of a business, you know, if I, you know, like I don't really need that to buy that car for the business, the company car for $45,000, you know, well, that saves me 45 down to the bottom line, right? If it's a multiple of 3, you know, the value just went up 100 plus, or on, you know, people have a problem with pricing, really do. If I just raise my prices by 5% on, you know, my $1 million sales or my $5 million sales, that just drops to the bottom line. Multiply that by 3. So we try to get them to see some of those simple examples of the net cash flow impacting value dramatically. And it's a great eye opener, again, for those folks who haven't been through it. So appreciate that question, Jeff. And then I'll just throw out here, somebody mentioned it a moment ago, I guess Dave or Mark, but in the ITB spirit, if we do a transaction for folks that you guys have referred in, there can be a very significant fee as we close the deal.
Did you say that you do the value piece and everything that you've talked about, but do you also help make the match with the buyers for your clients? Is that part of what you do?
Yeah. So we go A to Z. So with it, so if somebody's truly ready, we'll just go to market, manage the transaction. We've got 4 of those at different stages right now. Where great question. So if you guys haven't been through it all before, we want to build out the biggest buyer pool possible. So we start with the owner, and they know competitors, they know potential complementary businesses. They've been in the market for 30 years. So we use that pool, we use other resources. We look at there's a lot of boards out there. We can, post it. We work through our network, but so we're going out, we're figuring out who might be the potential buyer. And then we're spending a stunning amount of time, again, doing it what I think is the right way, preparing the business. So if we've got that runway, we're doing the consulting side of it, and then putting together the marketing package, which is no minor feat. It's depending on the size of business and complexity, but we're talking about a significant package that really tries to bring together everything that you might want in the due diligence for the buyer pool, and taking it through the process. And at the outset, like I say, the other bookend is just doing an estimate of value at the outset. It may be ugly, but it gets everybody on the same page, the owner,
Right.
Partners, advisors, and everybody.
Right.
David, what size businesses? Is it all sizes, or is there a unique size business that you target?
Yeah, so industries are different. One of the key drivers we target is a $500,000 EBITDA on up. That might, industries are so different, but revenue that might look like a few million up to the 25 to 50. Sweet spots usually in that 3 to 5 to 25. So that's a quick,
awesome.
David, do you ever work on the buyer side?
We can. It's we had several, a fair number of folks last year coming at us, but the problem usually is, almost to a person, that especially if it's an individual, they may have come out of 30 years of corporate, and they don't want to pay, right? They think we have. It's like recruiting, right? Jim, you represent the companies, not the candidates, and we don't have 500 that we're sitting here with. So to go do a buy search on the buy side just takes time and money, and there's no investment in that. So we can. We're actually talking with a group from outside the U.S. who's looking to do some acquisitions, and we might do that support. But that's a case where they've got money and they understand it. So we can. The vast majority are the sell side, though.
Well, the reason I ask is because, it seems to me that I've seen so few buyers that do a good job on the due diligence side of the equation. And that's got to be a huge opportunity for everybody on this Zoom call to, participate in due diligence in one way or another. I've been a part of horror stories, before and after the fact. And it just seems like that's a big opportunity that, to your point, nobody seems to want to pay for.
Yeah. Sometimes, on the private equity side, or just those who are a little bit more sophisticated will, but yeah, it's tough. I used to, back in my corporate days, we were a huge $20 billion company. We were doing stuff all the time. And we weren't any better in that, business unit would pitch acquiring some company, and we'd run some numbers, and, it was just if you did an autopsy, and people rarely did it, 1 + 1 really didn't equal much more than 2, for the reasons you're talking about, Jim, just not looking at everything. I mean, the people, doing the due diligence on the people and operations, and, even, all the boring things on the risk side. And
yeah, Jim, the point you're making is right, spot on, because when you have brokers, it's no different than buying a piece of real estate. That individual that is working with you, is actually trying to sell a piece of real estate as well. And then a business that's trying to get the transaction done, they're not going to bring up anything to their client to get the transaction not to happen. And that's why those nightmares happen all the time, is people believe that their business broker or their business or the real estate person is working for them, and they're really not.
So I'm glad you brought that up. I'm going to jump on my soapbox for a moment. And that is, one of those slides, I said we do it the right way. And that's what you're talking about. I know folks who will, just like you're saying, just to an extreme, all they want to do is get the fee. And they know that the client could spend 12 more months and dramatically raise the price, things like that. I've heard people say, on the transaction side again, oh, we don't want to get the attorneys involved or those CPA tax people yet until, 12 minutes before the closing, right? They just want to ram it. Oh, the attorneys are going to mess it up. No.
You want analysts in? No, analysts are bad.
Yeah. So,
David, I got a question.
Yeah.
So obviously, I mean, business brokers kind of are your competitor in some way. I mean, how many of the businesses do you work with, are they coming in only for the sale versus like you actually get them in the consulting? And then, from a transaction perspective, is your brokerage fee kind of equivalent to the rest of the business brokers?
So there's about 5 questions. So it's a mix of all the above. I would say with COVID, it's been a little bit more, hey, we're ready to go out and much quicker to market. So, I would say, I'm just thinking, these 4 that we're working with now, probably all were a little accelerated by COVID. One may have started before. So that's a little bit of an anomaly. It's more of a mix, I would say. Those who, we're working with, either they came to us, about sale, we talked about value, and they took a step back and extended it, right? But on the flip side, when we get in and we spend time and they understand the dynamics, they may have been thinking longer, and that can get accelerated. Maybe they had been thinking 5, 6, 7 years. So it happens that we accelerate that part of the process. Kind of coming back to a few of the topics all together here, Adrian, is difference between us and the brokers. The fees may be similar, but a lot of the brokers, and not to disparage, but their business model is getting a whole bunch of listings, putting up on the sites, and they just aren't and can't do the in-depth work that we do in general. Even just with the transaction, I would say, I mean, it's going to be 100, 150, 200 hours can go into, the sale and the prep for just the sale, not the consulting. And you can get to the closing table and it not happen, right? And we're starting over again, and we don't get that fee until we do transact. And so there's a big risk there. But the process, and that's why, I love it. I'm biased, but this value track process was distilled down into these 7 steps for that reason. And the understanding that if you just pop in with the owner when they're 6 months from selling, all you can do is try to sell it. And so, I think we do a better, more comprehensive, honestly provide more service to the client. And we're telling them all the time, no, wait, let's take 3 years, right? We know we're pushing our feedback. And we also talk a lot with the client about not taking the highest offer either. That's not necessarily, if they want to keep their people together, and you're going to find somebody that's got a different fit, different personality, and it's fun, it's interesting. A lot of owners buy into that. They don't want to just sell for the highest offer because they don't know what the new buyer is going to do. So they're working with working with the buyer to, if nothing else, sometimes get some cash into the hands of key people before they make changes, or just find a better fit. Or if the seller is going to be spending time with the buyer, which is very often the case for 6 months, a year or more, they realize it needs to be a good fit. So yeah. Did I answer your question, Adrian?
Absolutely. Yeah.
Okay.
And David, I got a quick one. Do you give them a range of valuation based on how long they want to stay in the business? Like if it's 1, 2, 3, 4 years, and then how much they would have to really develop the business in order to get to that valuation, so they don't just have one valuation? Because sometimes I've found it's predicated among 3 things. One, how much do they want to work? You know, you said most of these were tired. 2, how much do they want to transform the business? Because a lot of them don't have, you know, the inkling to do that. And then 3, you know, how quickly they want to get out. So it seems to me there's a balancing act of giving them a range of valuations. Do you do that?
Yeah, so you've described it really well, Daryl. Yeah, so, you know, and this happens. We had a couple I'm thinking of in particular where I said, we met several times, you know, going back and forth. And then I just said, look, don't write me a check, go home. And this was a husband-wife couple on top of it, which is even more stressful. I said, go home. If you're not going to work 30% more than you have been, then just don't engage, you know, passing that message on. Actually, they came back, we engaged, and then they actually didn't. And so, yeah, nothing happened. So yeah, absolutely. It's not only is there the reality of the time and the effort and the work put in over that, but like you say, the range of values, it's a range first of all, but think about it, it's also a moving target, right? So, you know, if we, you know, in 2019, if we said the business was worth 5 million, and well, let's go back up. Let's say, you know, it was 2017, you know, 5 million, and then, you know, 6 million in 2018 and 7 million, right? And they're on track and they're doing great, right? And they had a 5-year plan. The fundamentals of the business, you know, were fantastic, and they did that value growth. COVID hits, and, you know, sort of that pure, you know, consistent approach to valuation. Now they're down here. Now the business is functioning much better, right? So that's something where we have to be very careful about in explaining this is, you know, we're going to go in, we're going to help you build value, but these external, you know, conditions are going to impact it. And so there's a lot of counseling around all these issues. You know, throw in another concept that, you know, follows on that, which is people wait too long and they're timing the market, just like you do in the stock market. And we've had a couple of just devastating situations like that where we couldn't get them to pull the trigger in the last few years. And then COVID comes in and just, like I say, it's just horrible. One business completely dependent on large gatherings went to zero in 2020, of course, and who knows what, we'll see where that goes. And then another client doing really well. We did valuation over a couple of years. They were like 10 plus. Couldn't just get them to move, and then found out recently that last year they had, first of all, they had a ransomware attack. They had several people leave. One of the partners wants to get out, and you know, they've probably dropped in value by, you know, in the millions, you know, at least a couple over that time. So, yeah.
Thanks.
David, Mark here. Yeah.
Hey, Mark.
Hey, sorry I'm late. Lost the Zoom email, but yeah, I've sold the business, my businesses a few times, and you know, we talked. You mentioned the word lawyer. Value is extremely important. It doesn't make any difference until it's in your bank account, you know. And the only person that ever helped me get it in my bank account was the lawyer. And you know, I can tell you horror stories. I'll never forget the worst one of all, where I sold to $1 billion company, and one day I woke up and the deal was technically signed, technically I say, but it really wasn't. And the $1 billion company hired all my employees except the executives. And when I talked to the VP of HR, he said, Mark, you know, they all came to us. This is not a society where slavery exists. They all came to us and wanted a job.
Yeah. Yeah.
I don't know anybody here that sold a business. It's just replete with that type of stuff. I had to put armed guards on all my locations around the United States where inventory was, and because they were ready to go in and grab the inventory. They already put the orders out, you know, take all the employees, take all the assets, and they were prepared to make the value of the company zero, even though they signed a contract. Yeah. Because in many cases, they want the customers, you know, and your employees. That's it.
Yeah. And also, okay, so let's talk about lawyers.
They help me.
When I work with my clients, it's so funny. You know, I start out, well, who's your attorney? You know, who's your CPA? Well, I don't really have an attorney. They've been in business for 20 years. You know, they need everybody, right? They need all of us. They need the attorney. They need the CPA. It just needs to be done the right way, the right people, the right coordination. You've got to have a lawyer in there. I'm not saying we don't talk to a lawyer. You know, so we get them all engaged at the beginning. They're all important. The other thing I'll quickly put out there, and we see a lot of this. I just wrote a blog, so you'll all get this in email form soon. Don't go it on your own either to sell, just like your house, right? People going to want to sell their house together. Yeah, house is complicated enough. Mark, you pointed out just one of 1,000 issues that can pop up. So you want professional representation.
Yeah.
We've got one client. It's actually that software situation. So the first volley from the buyer came, you know, after a few meetings. They had some information. We are now, the number we're talking about now is about over three times what they first put on the table. And, you know, the owner, if he had tried to do it on his own, maybe could have bumped up that first offer by 100%, but probably not by, you know, 200% or more. So, you know, I can't do software. I can barely, you know, open it and play with it, let alone write software. You know, people need to stay in their lane, and there's professionals for that reason. So that's just one other side note. If you ever hear of somebody trying to sell their business on their own, beg them not to.
David, do you do divorces too, where they got to value their assets and things? Is that a business for you, or?
Good question. Again, typically not. So we're doing an estimate of value. It's really good, but we're not taking it to court. We're not going to do the valuation for the divorce for the IRS, et cetera, et cetera. So we'll bring in some good folks who do like really in depth. When we're talking about value, we're talking about an estimate. It may be in the range of 2,500 plus or minus. You get into corporate divorce and actual divorce and all that, you're talking easily, low end 15, but 20, 25, 30, 35 grand. I mean, that stuff gets ugly because there's all kinds of liability back and forth, and we don't want to touch that from that perspective.
Yeah, I sold the business and didn't realize that, you know, my wife owned half the stock, and and most people don't know that own their business, that your wife owns half the stock, even though she. So you have to agree on value on that. I mean, you really do. If you went through a divorce, you have to agree.
And it's interesting. So I'm not involved with this at all. This is through somebody else. But the situation is just that they're going through divorce. It's been 1.5 years. They've been fighting and just putting it off. One party putting it off, but the husband is part of the business, and they're going back and forth on when it was. You know, this gets into divorce law, but you know, when it was started, was the business started after they were together, and all this, and there's no prenup, and then, you know, what's the value of the business, and then you get into, it gets ugly, even if there's no deceit, but, you know, well, was money funneled outside of the business that's not showing on the tax returns? More complicated in this case, I think three partners. So this guy has 30%. So what is 30% worth, and when's the timing of the valuation? Is it when they filed for divorce? You know, is it today? It's just a freaking nightmare, and we want no part of. We've got some good folks who can come in and dissect all of that, because you got initially the forensic accounting, then you got value, then you got the forensics on if somebody really is trying to hide assets. Who's been through divorce?
You gotta, as the business owner, if you want to keep the business, you know, because you can't sell it unless you own it, you have to buy your spouse out. Mm-hmm. And that's why so now that you don't have to agree on value, you got to come up with cash to buy the business. So
welcome to my 2020.
Oh boy.
Yeah, there's so much
lawyer.
No, I mean, this exact thing: divorce, selling business, all of it. Yeah.
Yeah. I mean, the bottom line in all this is these things are so complex, like all of what we do, and we just, you know, if we can get around the owner and get the right resources and the right team, there's,
I'll throw this out. It looks complex, okay? That's because it's the emotional side. But what always gets me, okay, I've been through a divorce with a business and everything else, and the decree was only 2 pages. Okay, the end result, the legal document was 2 pages. I've sold my businesses. The legal document has been only 3 pages. Okay, because it just says the value in there, and it might list an asset, which would be an appendix, but they're not very long. And so, you know, if you go through one of these fights and it becomes a fight, you just got to be non-emotional. But, you know, and then all of a sudden it's just 2 pages, but all the discovery is like 100 boxes.
Yeah, well, and you know, that's true. And I've said, you know, I've been through divorce as well and all that. It doesn't matter. Any kind of negotiation, there's 4 people that can screw it up. One of the attorneys or one of the individuals, you know, and it can be done in so many ways. The emotion, you know, on the part of one of the partners. I got another situation. This is a client been trying to, been fighting, you know, for about, I don't know, a year and a half. So the partner left, but there's still a buyout in theory. And it's been a year and a half, and I know they've spent more on legal fees at this point than the payout could have been. So you're right, and that's a tough one. It's really tough. Yeah.
Well, great.
Let me ask another question on the. I have a number of friends that sell their businesses. That's just the you know, I built a business because I had a lot of friends that helped me, that supplied to me. And they go to sell their business, and some of them go and become, you know, a 2-year contract with the buyer, and they don't get but 30% of the value of their company. So what the buyer does is says at the end of the first year you're going to get $1 million, and at the end of the second year you're going to get $1 million. But I don't. What's your experience on that? Because my friends really go through some significant health issues at that point when that lump sum's supposed to happen. They get shingles and all this other stuff. I don't know. What's your experience on that? You know, how does that work out?
Yeah, I mean, every case is different, and you know, it's a good question in the context of COVID because buyers are even more careful. So I think there's even more pressure to keep the seller in for a longer period of time, and or tie, you know, the final price to results over those first couple of years, or with different metrics, maybe revenue, other kinds of things. So yeah, you just got to negotiate the best you can. You know, when we're representing the seller, you know, obviously we're trying to get all cash up front, no time for the buyer, you know, and so on. And it just ends up somewhere in the middle. It just really is very different. It's all over the board. I think the current ones, it's going to be a mix. For sure with the software, you know, they'll need to engage them for at least 6 months, probably a year. And I imagine it'll go on longer from a consulting perspective. A couple other cases, it's just more cleaner, you know, small enough business that it may go much more quickly, but it's all over the board. It's all over the board.
Yeah, I mean, imagine how many people that sold their business in last year and had contingencies. COVID hit their business and now there's nothing.
Yeah, if it was straight up that way, yeah, very good point, Adrian. Yeah. That's why I always say, you know, it's kind of like Social Security. Get all the cash up front and assume you get nothing else, right? Yeah.
We got folks that have to get off the call. So Mark, Mark Grayside is the last one to come in. If you want to just say hello to everybody and make sure that they know what you're into, then we'll call it a day.